to do what we need to do as a human race to go green, get off oil and gas, and rebuild the electric grid, and just simply supply the energy to the planet that we need over the next couple of decades. We need a ton of silver, and it's just simply not there. It's not coming out of the ground.
Hey friends, thanks so much for tuning in. Just want to thank you again for swinging by SGT Report for all of the real news 24/7. We're doing our best to bring you the real news. And you know what I'm finding funny right now in the silver gold space and the crypto space is there's such a divergence of opinions. We have a former silver guru selling all his silver. We have another silver gold guru saying silver is the only way to go and gold will never be a monetary asset. And they're both Bitcoin guys. Boy, I'll tell you, it's just a crazy atmosphere here in the silver gold crypto space. And I have on the line right now Keith Neumeyer. He's the chairman of First Mining Finance and the president and CEO of First Majestic Silver. And he's at a silver gold conference right now in San Francisco. Keith, thanks for taking the time to jump on the line here.
Oh, it's always a pleasure. I'm glad to have the chance to talk to you today.
Well, I appreciate it, and here's what I want to talk about. Look, I'm a First Mining Finance shareholder. I also own some First Majestic, and I have to tell you, I can't believe where we're sitting here with First Mining Finance at 42 cents a share in a $237 million market cap, because the last time we talked, you told me how much the Spring Pole project alone is worth. I just want you to just reset that for me so I understand how undervalued First Mining Finance is right now, and then we'll get into some of these more topical issues.
Oh, for sure. I bought actually 200,000 shares last week. I actually put a bid in the stock today. I don't think I ended up buying any, but I've got a bid in there. So if it comes down to my price, I gather I'll be filled over the next day or two if it continues to trade the way it's trading. This mining sector, it's very unloved again. It's like, geez, going back 2 years, it's almost like, repeating ourselves. The mining sector, has no institutional following, has no institutions in this market at all. I'm at this conference, I'm looking around the room, and, it's full of retail shareholders asking very similar questions that you just asked me, but or I'm sure we'll be talking about during this interview. But in the case of First Mining, we've got 25 projects. One project is worth 3 times the company, or 3 or 4 times the company's current market cap. And that's the Spring Pole project, which has a value of on an undiscounted basis around $1 billion, and on a discounted basis about $800 million, and that's U.S. Also, the internal rate of return on an undiscounted basis at $1,300 gold is over 30%, and on a discounted basis, it's over 25%. So these are it's a highly as far as we're concerned today economic project at current metal prices. It just needs obviously to be permitted, and it needs a full feasibility study and all those kinds of things, of course. And so would be somewhat valued less until it gets those extra reports done, which we're going to be doing over the next year or two. But it's still ridiculous the way that where the stock is valued or the stock is trading, and then that doesn't even take into account the other projects. You've got Goldland with just sticking to Spring Pole just for a sec. You've got 5 million ounces of gold there. That's one of the largest gold projects there is in North America. Then you've got Goldland with over 2 million ounces. You've got Hope Brook with over 1 million ounces. You've got Pickle Crow with another 1 million ounces, and you got Cameron with over 1 million ounces. So these projects are extremely exciting, and they're just simply not getting the value in the marketplace that they deserve.
All right. Well, just a couple of yes/no questions. Seriously, yes or no to these 2 questions, and then I'm going to follow up here. Okay. I'm
not sure if I'm capable of doing that.
Well, give it a shot here. Do you think that this bond bubble is sustainable in perpetuity?
I am a believer that interest rates are going lower.
Okay. And do you believe that this stock market bubble, the Dow, the NASDAQ, the S&P, do you believe that this stock market bubble can go on in perpetuity?
No.
Okay. So here's my question. Our friend Steve St. Angelo writes on November 9th over at the site SRS Rocco Report, global gold investment demand to overwhelm supply during next market crash. You and I both believe there will be a market crash, or at least a very, very serious correction at some point in the future. Is that what it's going to take to make the gold, silver mining stocks, and gold and silver specifically, more loved? It's such an unloved space right now. What's it going to take for sentiment to turn?
Well, I look at this market, I've said it 100 times, very similar to 1999, 2000. You probably remember the Y2K scare and, all the, business plans with .com at the end of them going public for, ridiculous valuations. And, we're seeing, a lot of strange anomalies occurring right now in the marketplace, which reminds me of exactly that period of time. And, the market didn't crash all of a sudden. It actually, the NASDAQ was cut in half over a period of 3 years, and it didn't happen overnight. It was just the money started to leave that market and started finding other homes to invest in. And, whether we see a crash or not, I don't have a crystal ball, but, definitely you need to see institutional money come into the mining space. And what it's going to take for that to occur is, them waking up to realize the ridiculous valuations that exist in this market, because it's really the only segment of the public markets that hasn't gone up. Everything else is in kind of bubble territory, and they need to, level out or correct or at least calm down, or some reality needs to set in for these institutions to say, hey, look, we need to go buy, some physical assets, whether it's copper, lead, zinc, gold, silver, we need to, get into real assets. And I think it's going to happen. It's just, you don't know when.
Well, we see it happening sort of in, starts and stops here and there. Like, here's an article from November 13th from Zero Hedge. Ray Dalio goes on gold buying spree, adds 575% to GLD holdings, becoming the 8th largest holder. Well, that's GLD. I mean, that's not actual physical gold. It's not even a mining stock that has the gold in the ground. And it's very frustrating to me that it's great that he's adding 600% to his GLD holdings, but that's not even real gold. But I think it does send a larger message that there are institutional investors out there that know what's up and do want to hold the metal to get through whatever storm is coming. So what do you make of that news? What do you make of GLD holdings?
Well, I think it's good news, obviously, that he's doing that. I would maybe try to educate him on what he should be buying in the space that's better than GLD. But it is it's kind of where we are in the financial markets, isn't it? You talk to the fundamental type fund managers now, and there's very few of them out there anymore. Whether it not just in the mining space, but I mean right around all industries. Everything's become ETFs. So you as an investor or Dalio himself or other investors, it's just easy to go buy an ETF or a GLD type instrument because it's understandable. It in the case of ETFs, it covers a basket. So it prevents them to have to really think. If you're buying physical gold, you got to worry about, okay, where are you going to put it and how are you going to do it and so on and so forth. Yet I can just go on my computer and buy GLD. We all know that GLD is a bit of a problematic situation, but for the big funds that want to, get into this industry or this market in gold or silver, it's a very easy instrument for them to purchase, and that's why it's attractive to them.
Yeah. Well, it's a little frustrating for me to see those types of news items, but, it is what it is. We live in a crazy world right now, and one of the elephants in the room is this cryptocurrency space where I think, a year ago, the whole market cap of the cryptos was probably, I'd have to go look, but I think it was certainly under 30, 40 billion, and now it's north of 150 billion. And we have a disparity of ideas and beliefs now, even here in our own silver gold space. People I've been interviewing, Keith, for as many years as you, friends of mine in the space here. We have one former silver guru just told Crush the Street that he sold all of his silver this summer, and he only believes now in gold and Bitcoin.
I sold all my silver this summer. I really have no interest in it because in the digital age, I just don't believe that people are going to store thousands of pounds of silver hoping that the gold-silver ratio goes down.
We have another sort of gold-silver guru, a friend of mine, Bix. He sort of believes that only silver and Bitcoin are the way to go. It's like nobody can get on the same page here. And my whole thing is you definitely want to hold some physical silver and some physical gold and dabble in the cryptos. And I'd say, stay away from Amazon. You want to talk about bubbles, stay away from this bond bubble. But it's so funny to me how much discord has been caused in the silver and gold space. And just to circle back on that silver guru selling all his silver over the summer thing, if that's not a sign of ultimate capitulation, I don't know what is. He was a silver guru for a decade.
Yeah, all these markets are being chased, and it's just this. Everyone's doing the same thing. Everyone's got the same algorithms. Everyone's got the same calculations, and they're just chasing these markets. And as long as they continually go up, it doesn't matter if it's cryptos, it doesn't matter if it's Apple or Amazon, or it really doesn't matter. As long as they keep going green every single day, the money will keep chasing it. But God forbid when things actually change, because all the computers will go flipping on the other side and start selling into what? And I'm actually really concerned that this market can get really ugly, and whether it's the crypto space or the Nasdaq or the S&P, I don't know, but it's a very strange market out there, and it's very bubblish. It does concern me, and that's why I'm deploying money now in the mining sector. I'm picking good stocks that I'm comfortable with, that are on sale as far as I'm concerned, and that's why I'm buying First Mining Finance right now.
Yeah, and you sparked a thought here, because I think when these bubbles burst, Amazon being a great example, any of Netflix, any of these sort of nosebleed stocks, when the market turns and the program selling commences from the deep-pocketed institutional investors, there will be no liquidity. And that money's going to have to go somewhere. Money that the smart money will get out of those stocks early. The Rothschilds always said leave the last 10% to the suckers. But when these markets turn, there's going to be a lot of money looking for undervalued stocks and companies, stocks trading at book or below. And I think a lot of that money is going to come into the mining sector at some point. So let me ask you this question about First Mining Finance. First Mining right now is even trading, for all the gold in the ground, it's trading below the average for all gold developers. The number I got off your website is $21 an ounce for gold, and that's actually below the industry average. So even there, it's sort of a steal of a deal. Why do you think your gold's only being valued at $21 an ounce?
Yeah, and quite frankly, that's an old number. I think that presentation is a couple of months old, and the stock is now at 52-week lows. So I would have to do the calculation to see what the actual number is, but it's probably south of $20. And I think part of the problem is just the whole sentiment in the industry. It's just it's just so poor right now that no one wants to own the miners, and the institutions have completely left this marketplace, and so that's part of the problem. But the other problem is that First Mining owns such a large portfolio of assets. And if people want to spend the time and go look at that presentation that you just referred to, you can see a map of North America to see where all the assets are, and it's quite impressive, the portfolio that we've been able to put together for that company. And but unfortunately, what happens is it does create some confusion, because the analysts or the average investor, they don't know how to value the assets. A lot of companies out there are simply single asset companies. So it's easy to define them. Or maybe not easy, but easier to define them. And often single asset companies trade differently than multi-asset companies. It doesn't have to be that way. When I put First Majestic together, my whole strategy was to buy a large portfolio of projects, and that's what we accomplished. But it takes time to get the market to value the company based on multiple projects, and you've got to spend money, you've got to advance them, you've got to de-risk them, you got to prove to the market that that it's not being valued fairly. And First Mining is a relatively new company. It's only been around for a couple of years, so it is in its early infancy, and we will continually develop these assets, and then over time we'll start getting value for them.
Well, yeah, the milestones just over the last 2 years, I forget that actually a lot, that the company's so young. So I'll put this milestones chart up over the last 2 years. It's really an amazing feat of different acquisitions, and the spring poll probably being the crown on the company right now. But let me ask you about cycles and markets and sentiment. It was just February of this year that the stock was at 84 cents, roughly $460 million market cap. And, here we sit towards a 52-week low. Do you think that the mining stocks tend to do better in the new year? It's sort of been my experience that they seem to do much better in January and February and sometimes March. And do you think maybe that's what's going to play out again next year?
Yeah, it's an interesting comment. I've done charts, and if you go look at some of my tweets that I've done, I've actually addressed this particular question. Because if you look at cyclicality, which is generally true, it's not always perfect, but over the last 30 years, the gold and silver and the miners, start to perform around this time of year, October, November, December, January, February, and they start to weaken, in March, April, May, and June, and they generally hit their lows in June. And then, July and August, they start to, rebound a little bit and go sideways, and they start climbing again, towards the end of each year. And, it's a pretty interesting chart to follow, and it's surprisingly accurate. And I trade myself, based on that cyclicality. But again, it's not always accurate. If you look at 2016. We had the bull market start at the early February, where the miners went up 500% between February and August, and then they started to crash in August, and most of them had dropped by 50% by the end of 2016. So that was a little bit of an anomaly, but most years you're dead on about cyclicality.
All right, we'll keep our eye on it. And I'm going to just put up here, too, this chart for project valuations versus First Mining Finance's market cap. And, we've got roughly a valuation on the assets at around $1.4 billion. And this chart says the company's worth $320 million. We're actually down to about $240 million. So it's even a bigger bargain. I just wonder when the institutional money is going to start to take notice. I really do. It's been quite shocking to me to see the mining stocks, so many of them so unloved for so long. And I know that's sort of where we started this conversation, but really, I said the other day in an interview with Bill Holter, this whole crypto thing, and I'm in the crypto space, and I'm glad I have some Bitcoin, and I've kept all my Bitcoin cash, and I dipped a foot in the pool about 12, 18 months ago. I advised my listeners to maybe do the same. Just because, there's a fear of missing out. And but it is salt in the wound. It really is. You and I have talked about this before. To me, it's salt in the wound to see silver at 17, gold in the 1300s, and Bitcoin over 8,000. And again, it's caused so much discord in our own space. People selling their silver, others saying don't buy gold, and all of them saying buy cryptos. I don't know. Just your thoughts on it before we part ways.
Yeah, it's a market that I completely missed. I remember a couple of years ago when I first learned about Bitcoin that I actually attempted to open up an account, but it was just so difficult to do that I just couldn't figure out how to do it. And I should have spent more time, obviously. And
that's actually, you know what? A lot of us have had that experience because that was my experience early on. It was too confusing. It is. There's a barrier to entry. They've made it easier though now with places like Coinbase and some of these others. It's easier now. But no, you're right. It gets very confusing with your own wallet and all that. It's definitely a barrier to entry is sort of the educational process in the whole cryptos.
Yeah. I was speaking to someone today that, swears up and down that, Bitcoin's going to hit $30,000. And, maybe when it was at 200, people were talking about 8,000, people would have laughed at them, but now it's 8,200. And, someone says 30,000 and you can't laugh at them anymore because it could actually, potentially go there, and it's unfortunate. But I tend to be a little bit price sensitive. When I'm buying, stocks, which I've been doing for over 30 years, I like buying them when they're on sale, and I like selling them when everyone's trying to buy them. And I've done well trading like that over the last several years, and I'll continue to do that. So it's kind of hard for me, even though people are saying, Bitcoin is going to 30,000 at 8,200. I just, for me, I'll just sit on the sidelines and watch.
Yeah, no, I hear you. And I think that at 8,200, that's probably rational. Most people don't have $8,200 to throw around to even buy one Bitcoin at this point. I mean, literally, I'm speaking about most people in the United States. You've seen some of these statistics. Something like half the population doesn't have $500 cash to pay for an emergency event. I mean, there's a lot of people, Keith, in this country that are hurting. I mean, really, really hurting, living paycheck to paycheck. And I know the economy is supposedly on fire. And, I'm grateful in many ways that the economy hasn't crashed, because I think the coming crash could be horrible, especially if the petrodollar, loses its value. This is probably how we should round out our conversation, because I've been talking for so long about the petrodollar. The world is moving away from the petrodollar as the world's reserve currency. To a large degree, China and Russia are now partnering between themselves to buy and sell oil and other assets in their own currencies. That is a huge sea change, and I don't think the average American has any idea what's going on geopolitically. And the petrodollar probably has 5 or 10 years left. I don't know. I mean, I didn't think it did, but now who's to say? But I don't think the average American has any idea how cheap silver is, what a value gold is as a way to preserve wealth, and the fact that their petrodollar is very, very long in the tooth at this point.
Yeah, no, I'm a firm believer of that as well, and I'm a big believer in what Jim Rickards says about the future of gold, and how to right the world. And we've got Russia continually adding to their gold reserves. We've got China, of course, hiding what they're doing in the market. Every now and then they come out with a new report, but it's pretty well discounted as being complete nonsense. But yet their number is climbing. You got Turkey and several other countries around the world that are increasing their gold reserves. And the question you have to ask is why. What do they know? They wouldn't just they wouldn't be doing it if there wasn't a reason behind the scenes. And I think that there will be a point in time where the governments will have to just fix the price of the metal at whatever number, pick a number. It's going to be much, much higher than where it is today, and that's going to be the only out to right the system. And that will be the collapse of the petrodollar, and that'll be the collapse of most of the currency that we're familiar with, and it's going to be a new world. But we just don't know when that's going to happen, and whether it takes that to revalue gold. I think gold will start to revalue itself much sooner than that, because I think that people will start to catch on and what's going to happen. But I think as an investor, you've got to have gold and silver in your portfolio just to protect yourself.
Yeah, well, obviously I agree. I've been saying it for a very long time, and it was that SRS Rocco report article that he says after the next market crash, gold will easily go through its old high of 1900, 2000, and probably north of that as as people turn to the one asset that can help them survive a storm. And here's this tweet today from my friend Lewis at Small Gold. He writes, "Winning, it could have been far worse. Gold drops to key technical support after $2 billion purge. After surging above its 50-day moving average on Friday, it appears somebody is keen for that key technical level not to hold as they dumped $2 billion in nominal." The bottom line is these bankers would love to whack gold and silver. They'd love to whack gold back down below 1,000. And I don't think they can do it, Keith. There's just too much geopolitical. There's too much interest from nation states all over the planet that want to own the yellow metal.
Yeah, and the unfortunate thing is, or the irony is, that a lot of these banks, that you're pointing fingers at, are generally Western banks, and they're basically giving the gold, to the East and to other buyers, for prices that it shouldn't be, sold at, because if there was no, heavy hand on this market that's continually holding it, in this trading range, the gold would be trading at much, much higher levels, and it would cost these governments much, much more to accumulate the gold that they're accumulating. And it's really unfortunate that we're seeing this huge transfer of gold, to other regions of the world.
Yeah, well, I couldn't agree more. I'd still love to see a Fort Knox audit. I think it was Steve Mnuchin who claims to have been at Fort Knox for probably about 5 minutes. He peeked in. He said, "The gold's safe." I mean, that's quite an audit. We haven't seen an audit since, the 50s, 1954, I believe. And a former Goldman Sachs guy peeked his head in the door and he said, "Don't worry, folks, your gold's safe." Yeah, I'd like to. I always add, safe in the hands of the Rothschilds. I don't think it's there anymore, personally.
Well, there might be some, but it's definitely not all there. Whatever there is probably owned by 100 different people.
Yeah, that's right. That's the bottom line. It's all hypothecated and rehypothecated, and if you don't hold it, you don't own it. Look, I know we're running short on time here, Keith, but just a couple more questions. I want to talk about First Majestic briefly because I am a shareholder, but just to round out the conversation about First Mining Finance, I mentioned the cycles, and hopefully things are going to be looking better in January, February, March. Honestly, at 42 cents a share, I have to believe things are going to be looking better in 2018. Do you want to talk about any of the exciting things that investors can look forward to in 2018 with First Mining Finance?
Well, sure. I think, First Mining is going through a transition. We put together that company and coined the phrase mineral bank. And then I even said at that time, back in 2015, 2016, when we were building the business, that, we weren't going to ever drill a hole because back then it actually didn't make sense to drill a hole. But today that's completely different. The market actually is paying for good drill results. And so it's now cheaper to drill a hole in the ground to develop ounces than it is to go out and buy ounces. And, we were buying ounces for less than $10 an ounce, and now you can't do that anymore. So it makes a ton of sense to actually drill and develop these projects. And that's exactly what we're doing. We're going to spend the next couple of years developing these projects into, producing assets. And, whether we take them into production ourselves or whether we partner them out to other groups to take them into production. So, First Mining has gone from a mineral bank concept to a development company, and development companies, are completely different animals, and and they're rated quite a bit differently. The market quite hasn't picked up on that yet, and that's, I think, where the opportunity is. I think once the market realizes that First Mining has actually become a development company and is going to start actually seriously developing these assets, I think the stock will go through a re-rating.
Yeah, or potentially it could get bought out from a big boy. That's certainly possible. Let's talk about First Majestic here as we wrap things up. Again, I'm a First Majestic shareholder, and I think it's a great company with real silver, real results, pulling the real physical metal out of the ground. What's an update for us on First Majestic?
Yeah, it's interesting because, First Majestic is also somewhat going through a transition. I guess maybe the whole mining sector is going through a transition. It's been a tough 5 years, and we were losing money on every ounce we sold back in 2014, and that was obviously pretty stressful for everyone, not just First Majestic, but today we're doing okay. We're making a modest amount of money. We're still focused on driving our costs down, where we've bringing new technologies into our operations, which is, I think, some of the most exciting things that have happened in the mining space since I've been in this industry. Over the last 30 years, because the mining industry has moved so slowly to adopt new ways of doing things, to adopt new technologies, and that's all happening now, forced by low prices. And you've got some of the big companies like Barrick and many others, pushing technology, into operations, and we're following along, and then we're bringing some pretty exciting things into our operations over the next 2 years, which is going to continue to help drive down costs, which is extremely important. Even though I'm a bull on silver and gold, and I think both metals will appreciate quite nicely over the next couple of years, there's never a guarantee. So as a mining company, we have to remain focused on our costs. And if we get our costs continually down, which I think we're going to be able to do with new technology over the next couple of years, and then we have gold or silver going up, it's almost like a double whammy where we've got lower costs and increasing margins, and the profitability of the company will just be amazing.
Well, look, I'll leave people with this. I'll give you an amusing Bitcoin aside here in a second, but I'll leave folks with this. Clif High says that December is going to bring good things for the silver gold space. He emailed me that personally when I asked him about this amusing Bitcoin aside, and here it is. You'll appreciate this, Keith. It doesn't require a response. It's just one of those, like, you got to be kidding me deals. Terry Duffy, the chairman and CEO of CME Group, is very excited to launch the new Bitcoin futures vehicle on the CME. I think it's going to launch around December 2nd. And there's an amusing clip here with CNBC where he's practically foaming at the mouth about investors' opportunities to short Bitcoin with this new vehicle.
When can you be able to short this product? I think sometime in the second week in December, you'll see our contract out for listing.
This year?
December of this year, yes.
And I just share that with you because I think it's very amusing when you and I both know what the futures markets has done to silver and gold. I don't think that can go on forever. I really do think there are good days ahead for people who hold physical silver, physical gold, and sound mining stocks. That's my personal belief.
Well, I'm with you on that. So I'm all in, and I think the values that we're seeing right now are pretty darn good. So I don't mind putting money to work right now.
All right. And, well, final word, too, on that CME Bitcoin futures deal. I also emailed Clif about that. And in his words, the data from the WebBot project suggests that the CME really, quote unquote, screws the pooch with that one. And they're not going to be able to bring Bitcoin to its knees but with the futures. But we'll see. I'm very dubious. It screams opportunities for manipulation in my mind. And I sure would just like to see that come to end, Keith. We all would. You would. We all would. Silver and gold, silver specifically, should be trading at probably a couple $100 an ounce when priced in. How many dollars are out there now? Well,
production is dropping globally. I saw some numbers out of GFMS the other day, but I'm having a hard time believing them because I know that Mexico production's down, Australian production, Canadian production. I'm talking about silver is down right across the board, and consumption continually climbs, and we're going to see another deficit as far as I'm concerned in 2017, and we've seen multi-year deficits, and that's not going to change. To do what we need to do as a human race to go green, get off oil and gas, and rebuild the electric grid, and do just simply supply the energy to the planet that we need to do all the things that we need to do over the next couple of decades. We need a ton of silver, and it's just simply not there. It's not coming out of the ground.
Yeah, well, it is coming out of the ground with your projects. That's the good news. So, guys, you can check out First Majestic. That's AG in this country if you want to check out the ticker. And, of course, First Mining Finance is FFMGF on the over-the-counter. And on the TSX, it is FF. And our guest has been Chairman of First Mining Finance and President and CEO of First Majestic, Keith Neumeyer. Keith, thank you so very much for your time.
Well, thanks. It was good chatting again. And, feel free to have your listeners follow me on Twitter. Just Keith_Neumeyer. I don't do a lot of that, but every once in a while I put something worthwhile. At least I think it's worthwhile reading out there. So
all right, copy that. We'll follow Keith on Twitter and check out the websites for First Mining Finance and First Majestic Silver to find out more information about those companies. Keith, thanks again.
Okay, thank you.
All right, thank you. And guys, thank you so much for tuning in. We very much appreciate your support at sgtreport.com. Have a great week ahead. God bless.
There's, I believe so far this year, there have been over 1,500 arrests related to pedophilia. And you don't see that in the news.